In line with the recovery of some big countries previously struck by economic crisis, China has also started to show positive progress. The latest data release showed that during the third quarter of this year, China grew by 7.8%, higher than the previous quarter, which was only 7.5%. As one of the biggest economic countries in Asia, how will this positive data affect the price of commodities in the global market? How will it affect Indonesia? To discuss more about this, we have Mr. Ariana Akbar. He's the educator and market analyst of Monex. Mr. Ariana, thank you so much for your time. Well, the data provided us that China is at least like increasing slightly positive into 7.8%.
Yeah.
What does 7.8% means actually? Can they, as a country, maintain this kind of a percentage, or there is a possibility they can increase the 7.8% more?
Well, there is a possibility that they can increase into 8% as they expected.
Even 8%.
Yes, the target, because the main income is the export. So we believe, I do believe, that the export from China is still increasing because the focus of the market right now, recently, is the U.S. It is how the government will handle to tackle the problems, the debt ceiling, the problems of their budgeting.
China are so strong and solid in terms of their economic growth because supported by its main export. Considering what's been happening lately, do you think that the Chinese exportation destination might shift it slightly?
Well, starting 2003, and it was beginning until 2008, and until now, I think one way of avoiding the booming of economy from China, they are targeting the emerging markets, such as Indonesia, the Asian region countries.
Well, does it make China at least becoming vulnerable when they are depending too much on export, and where all of their main exportation destination is having quite a sluggish economic situation? Let's say they cannot depend much on US or even the European Union. What do you think about this?
Yes, I believe that the target still remains, the focus still remains on the emerging markets. So they have very dependent on that markets right now, or at least until 5 years to come.
Do you think that for the longer run, China will eyeing more on this kind of emerging market destination? Because in fact, emerging market countries themselves, they could be very sensitive toward the global exposure, let's say.
Yeah, but still, the population is one main reason why they're still targeting this market. So I still believe that this is the focus, this is the target remains.
Indonesia, based on what you can observe, how do you think China look at Indonesia nowadays?
This is the country that consumes most of the export from China. So in a big picture, Indonesia is still the main target in Asian region for China, for China's export.
So we are benefiting simply because of the, what do you call this, population support, that the consumption goods are needed so much.
Yes, and the regulations as well.
Yeah, which promising sector are potential for Indonesian market when China talking about exporting the consumer goods to us?
Yes, it is again consumer goods, such as electronics, such as, let's just say, but unlikely we will not depend on the raw materials, or maybe half raw materials. We will, I think, we still have this kind of imports, consumer electronics, such as that. Yeah, it consumes daily.
Yes, Mas Ariana, we still have another segment to discuss about this. We'll be right back with more discussion. Stay tuned on ReveNews International. You are still on MNC Business Channel. Our discussion is about the fluctuation of global commodities prices, and we still have Mr. Ariana Akbar, the educator and market analyst of Monex. My apology for the mispronouncing the second name. Mas Ariana, anyway, I've been wondering still about this 7.8%, and there is a possibility reaching even 8%. Compared to about 3 years prior, it's only about 7.5%. We can consider this as quite significant achievement, right? Within only 3 months. What are the main supportive factors that China can reach this number or figure?
Okay, I believe that diversification is one way of another, that's saying that China is having their products diversified into some categories that is reachable, that is cheap, that is can be maintained low cost, so that the export from China to emerging markets will be still in their target price. That is one solution. The other is that they are, let's just say, decreasing their imports from other countries. They're trying to make it in their own country, consume it, and then decreasing all the materials that is needed by export. By import. And the last one is the regulations that they're trying to do savings so that they can maintain the target cost of every expense that they have to spend.
As a country with a very huge population, I've been wondering, in a country, what could support the success of decreasing the importation? Every single nation in this global market cannot simply really minimize their importation. But as you said, China are successful in terms of decreasing their importation. What are their best strategies in terms of applying this kind of method?
This is what has happened in 2003. Firstly, they closed the economy first. They prepare all the infrastructures, the regulations, the sources, the human resources even. They have them to be affordable for any foreign investment to come in the country. After that, they will have this kind of regulations, technology transfer, low cost of labors, regulations, especially they have their distribution, their production to be shortened. So in the way of saying, they have no more any unnecessary cost that they think it will be more costing.
So it works very effectively back then in 2003 when they first closing up their national economy first. I'm so curious about this. I'm tickled as well. Will it work actually for a developing country like Indonesia when we talk about the internal and domestic protection by doing the same thing like China did?
Well, it is, it depends on how the regulations will work. If the government trying the same thing with China, well, we cannot do the exact thing, but at least we can decrease or lower any import things that we have had recently. So by doing so, we can produce anything, goods, services that we produce here, and we can use it rather than export it.
I see. On the previous segment, you mentioned that we're not depending too much on the Chinese raw material importation. On vice versa, we exporting our raw material. I would like you to explain later on about which commodity are promising the most when we talk about the exportation to China. The bottom line question is, do you think that we can see this as the Indonesian strength when we talk about the exportation to China?
A strength? Well, it depends which commodity that we export. For coal, yes, we do have the advantage of coal, but still, other foreign rules, regulations will restrict this kind of, let's just say, the area to cover to mine this commodity. That is the first one. The second is that foreign countries have their own protections. This is have to tackle. So I think these two problems we have to overcome. Then if we could do this, I think we will have a bigger opportunity.
I see. With the rupiah depreciation, the dollar, US dollar especially, are increasing very significant. To some business people, they said this is benefiting for the exportation. Have we somehow grabbed that opportunity when we talk about the momentum of the rupiah depreciation, even though we are suffering internally, but at the same time, on the exportation aspect, we are quite benefiting. But have we been able in grabbing the opportunities there?
Not optimally. I would say not optimally because one main reason is that we're just focusing on our rupiah exchange rate. We are not focusing on how we do things after this happened, and during and after. So by doing so, we didn't think that how we lower our costs by using this opportunity so that we can export more.
Do you think another world currency also have the same characteristic when it comes about fluctuation? Are they fluctuate quite rapid like the rupiah Indonesian did?
Well, the way I see it recently, I think rupiah is, well, in Asian region, rupiah is still the most fluctuating rate.
Can I consider it also as the weakest one among the region in ASEAN when we talk about Indonesian rupiah?
Based the economy performance, yes, I would say so.
So we have to also be careful on this part when we talk about the national currency.
Rupiah is very vulnerable, I think.
I see. Yeah. Well, during the commercial break, we happened to use the case study of Australia. They also do the same thing like Indonesia, exporting their mining sector to China. And when China is slowing down earlier, they're also suffering the most, Australia. Will that kind of thing happen to Indonesia? And what kind of thing we can take as the preventive actions?
Yes, I believe that we cannot depend mostly on mining because we don't want to have this happen also to us. So I think we have to look after more commodities to focus on.
No, more commodities to focus on. I haven't asked you this ultimate question. Which commodities are or can be considered at the top list on the exportation, the favorite one?
I think it's the agriculture ones. Palm oil, seeds, especially that related to daily consumption, fish, marine exports, seafoods. I think it has not been explored optimally. So basically, this is the ones that we have to make the regulations on, focus on the exports.
So will you agree when most of the Indonesian business players as well, they are saying that the regulation here is not really that relaxed in terms of opening up the tap for this kind of exportation opportunities? We have several hampering there.
Yes, I agree. Because the regulations is not, well, I would say it's not very adequately supportive for this kind of doing business here.
But what will happen if the government give their defense statement? I'm doing this, I mean not really that relaxing the exportation regulation on behalf or for the sake of the nation's protection. Do you think that it's still relevant when we talk about strengthening the internal or domestic protection when it comes about the exportation, especially related to the raw material from Indonesia?
Yes, well, this is about, again, regulation, which is more vulnerable than what we have to focus on export. So if the regulation is more tighter, then the export will be declining because there will be more and more costs to be handled.
And that's something we must be worried of. Mas Ariana, one more segment to discuss about this. I hope you are standing by for us. Thank you. More of the discussion is coming up next. Stay tuned on ReveNews International. Welcome back. I'm still with Mr. Ariana Nur Akbar, the educator and market analyst of Monex Investindo Futures, and we are talking about the fluctuation of global commodities price. Monex Investindo Futures happen to be the big lover of gold commodities. Well, I've been wondering about this. Are there any correlation with what's been happening, let's say in China, the economic are strengthening, and then the US shut down? We will talk about that in more detail later on. Has it, or do we have any correlation with these gold commodities? How will it impact in the gold commodities, the global market?
First of all, gold is the most safe haven.
Again, you promote this.
Yes, we consider this the most safe commodity that we have to buy, to not to spend, to save, to buy at a very relative low cost. Regarding the recovery of the economy, I think when gold is reaching the target, the price target of this commodity, people would have to vote this commodity in case if they have problems with their budgeting, with their economy, with their savings, investments, that's such of things. But then, when we are talking about how recovery will end up, lifting the price of gold, again, it will be back to investment. So, if they have more money to spend on gold, they will do this kind of, buying, purchasing this commodity. So if the economy is not supportive, I think they will hold off not to do anything, try to fluctuate the price. They try to shake down the price then, and then lastly they will buy it at certain price that they think this is low.
As the market analyst, I've been wondering if you could share the tips or the strategy. How are we supposed to know that we already get or invest at the most relatively low when we talk about the gold commodity costs? Because I wonder when will be the best timing to buy. Let's say you said at the most relatively low. Okay. When will it be?
Basically, it is the principle of gold that if the gold is reaching, or let's just say the same amount of BEP, break-even point of how the gold costs, then the price must be at the same price or lower. Let's just say the cost of gold, the cost of maintaining the gold, producing the gold, let's just say that how to make 1 bar of gold is created costs $1,000, then the price must at least near that price. As such, Goldman Sachs said that within years, the lowest gold price would be like 1,040. So that would be near 1,000. In this case, I would assume that gold cost is 1,000. So that would be a margin of $40. So if the gold is reaching this price, hopefully it will going reversal, or let's just say on a waiting and see how it will, go back to the recent price, or it will going lower. So I think it is basically about cost and price. If the price is the same, then will be the target lowest price will happen in, let's say, 4 or 5 years.
What kind of global economic situation will make gold be at its lowest level of price?
This is about uncertainty in the U.S. This is about the
again back to America.
Yes,
talk about this kind of uncertainty.
This is about the budgeting issue. So last week, the U.S. government is opening their their offices, their departments. They are saying that we have to do something about this issue. So in 15th of January, there will be federal funding. They will talk about the funding, what they have to spend, what they have to save, what they have to invest. And the second thing is on February 7th, there would be, I have the data here.
Please.
It says the budget deal extends the U.S. government's borrowing authority. So the borrowing policy will be maintained, will be secure, beginning that date, 7th of February, next year.
With the recent data you have about the gold commodity price, how much longer should the Indonesian investor wait until they find that this is the best time to buy gold or investing in gold because it's already reaching its lowest level?
The lowest level. Okay, basically, I would say that the lowest level is at least near 1,000 within years. Of course, within 4 or 5 years.
That's a number from you. Okay.
Yes, but then every individual, every investor have their own target price. But still, likely, I happen to know that the data would be like it has to be lower than 1,300 to 1,240. That is, that's just for monthly projection for the price right now. So if the tapering issue, the budgeting issue in the U.S. fail, I believe the investment of gold is shortening.
With many given possibility situation, do you see a significant increase or growth when it comes about Indonesian investment on gold commodity?
On gold commodity investment increasing. Well, I supposedly that if we taking account any possible risk investment here, that's just regulations by the government, the economic fundamentals, I think the increasing investment in Indonesia for gold is would be like increasing more than 30–40%. And as such, diversification will work its own. So let's just say if we might like have the ability to buy the price at the whole price. We can try the installments. We can try the, let's just say the credit sector will support this kind of buying, this kind of purchasing.
Back to America, when the US government decided that they really finally end up the shutdown policy, what kind of economic impact will us receive from this kind of thing?
First of all, there is a benefit, there is a threat.
Also, there is a threat following automatically.
Because the benefit, for such that they think the investment in the US is very risky, they will go to emerging markets instead of China, because China have their own protection and it's very tight. That is the benefit. The threat is we have to be careful that if the capital inflow going in Indonesia, this such event will automatically, potentially, will lifting up the price of the stocks. So instead of buying gold, they will buy the companies that produce gold.
Understandable. Well, even the first time they enacted this kind of policy of having this kind of government shutdown, everyone already got this kind of panic attack, I mean, on the global scale. Now, how tough or how difficult will it be for the United States of America to recover this kind of image that they are becoming always a risky investment destination? When do people really stop going there for investment if they keep doing this kind of thing continuously? Mas Ariana, what do you think?
Well, I think this is how the US government has to work on. They have to show their performance as well. They have to show that the economic activity is growing even bigger than being expected before. If they can do this, they can recover the market confidence on their own. Then they can invest more capital inflow.
I see. Mr. Ariana Nur Akbar, thank you so much for your time. Very useful discussion. Best luck for you, and have a nice fasting to you too.
Thank you.
And that was Mr. Ariana Nur Akbar, the educator and market analyst of Monex Invest in the Futures, talking about the fluctuation of global commodity price. And up next, we still have some more news and business information. Stay with us.